Hello, in this video we're going to be talking about a question that I'm always asked, and it's probably important for to a lot of new traders out there as well. And the question is, what is the best time frame for trading? Okay, when you start learning to trade, now it can be any financial instrument, whether it's FCPO or Forex or some other stuff, you probably don't quite know what time frame you should focus on. And that's understandable. And usually you would probably try all time frames and see which one works better. And along the way, you may think that smaller time frames are quote unquote better because they will have more trade setups. And when you have more setups, then by definition, more opportunities for you to make money. Well, this can be true to some extent, but here's the thing. The problem with using smaller time frames is that you need to be chained to your computer. Let's put it that way. You cannot move, and because it moves so fast, you will have to be sitting on your chair with your nose pointing towards the screen for several hours per day. And what I can tell you, that's not easy for me. Now, for bigger time frames, well, they may have less setup simply because the time moves slower, but the nice thing about trading at bigger or longer time frames is because you can, just monitor them less frequently. For instance, say you trade using a daily time frame, then you just need to check your charts once a day. Or if you were to use hourly or 60 minutes, for example, then you need to just check your charts at every hour or so. So in between that time, you can do other things. You can go fetch your son from school and whatever. At least you have a life. If you're new, I suggest that you may want to consider working on time frames that are not as short as 5 minutes or 1 minute. Maybe you want to go for 60 minutes or daily. Smaller time frames like, for instance, like 1 minute, it's probably not suitable for those who are just starting out. And the reason is that the controlling of your own emotions when you are in a trade is going to be a big problem, because you need to act fast. There is no time to think. You cannot afford to hem and haw and generally take your time whether you want to initiate a position or not. You cannot do that. You must have your rules all lined up and ready to execute. There's no time to think. So it's fine if you have already been doing this for a while and trading in smaller time frames is your cup of tea. But if you're just starting out, you probably will be better off trading in a bigger time frame. As I said, maybe you may want to consider either half an hour or 60 minutes or even daily, if your account size allows it. Okay, and the things that you have to remember, when you trade at a lower time frame, then because you need to make decisions, and when you are pressed It's human nature, you will tend to make mistakes. Okay? It's just a lot harder to control emotions when you are stressed. So as you see, there are a lot of things that you have to consider. Working with the wrong time frame at the beginning of your trading career can cause you to get disappointed and maybe giving up altogether. You need to analyze your trading style. Just be honest with yourself and find the problem. If your trading problem is related to time frame, then maybe you should switch to another time frame that is more suitable to you. I remember when I first started trading, I started with 5 minutes and then slowly went up higher and higher, and until I settled on 60 minutes, which is a sweet spot for me, and which is a time frame that I'm most comfortable with. So you need to find your own comfort level as well. Well, that's all I have to say on this subject. I hope you got something useful out of this video, and if you like what you've seen, go ahead and hit on the like button below, or share this video with your friends who may find the content in this video useful, or simply hop over to letprofitsrun.com for even more good stuff. Well, that's it for now, and I will see you in the next video.